Good afternoon. Welcome to Mansion House. What a pleasure it is to have everybody here in real life. It feels like old times, doesn't it? It is wonderful to welcome you all here live, of course, and those of you who are attending on the web stream. We are going to be discussing the darker side of finance today. We're going to be plumbing, of course, financial crime, its intersection with fintech, with new technologies, and how they're keeping up with the ruthlessness and cunning of the bad guys. We have a wonderful agenda before us this afternoon. And before we get on to that, I would just like to note the attendance of Viljar Lubi, Estonia's ambassador to the United Kingdom. I would also like to note the presence of Her Majesty's Ambassador to Estonia, Ross Allen. We also have the Lord Mayor of the City of London here. And we have Minister Andres Sweet, who is going to be sharing with us the view from Estonia and the work that they're doing there to combat financial crime. We'll also be hearing from Chris Farah, who is with UK Finance and is the foremost expert, I'm assured, on all manners of financial skullduggery involving payment systems and the like. And then we will be moving into a panel discussion. I'll reserve the introduction of the panelists until that time. And I should introduce myself. My name is Edward Robinson. I am a financial journalist and editor, and I covered the birth of fintech in the City of London, going back all the way to 2013, 2014. I worked for 20 years at Bloomberg News right across the way. And I am now a contributing editor to The Defiant, which is a cryptocurrency media site, which is a little wild and a lot of fun. Anyhow, I think we should move on to our first guest, who will be providing a short speech on the state of play on this topic in the City of London. It is my pleasure to welcome the Right Honourable William Russell, the Lord Mayor of the City of London. And just a little intro, the Lord Mayor has 30 years of experience in financial and business in the city, including senior positions in the banking sector. He was at first Boston, then joined the thundering herd at Merrill Lynch. He's been in equity sales in Asia, New York, and London, and is now chair of CDAM, a London-based asset management business, and a senior advisor to STJ Advisors as well. He was also on the board of Innovate Finance, which emerged as a global pace setter in bringing together fintech, startup community development, and working together with government. It is actually the model worldwide for how to stoke a fintech ecosystem. So please give a warm welcome to the Lord Mayor.
Thank you very much. Minister, Your Excellencies, ladies and gentlemen, just before we start, could we just hold a minute's silence for Sir David Amess, MP. Thank you. Thank you very much. So, welcome to this discussion on fintech and tackling financial crime with Invest Estonia, Embassy of Estonia, LHV, and SALV. I'm particularly pleased to welcome Andres Sweet, the Estonian Minister of Entrepreneurship and Information Technology, to Mansion House today. I am Alderman William Russell, the 692nd Lord Mayor of the City of London. And this means that I am the civic head of the City of London Corporation, the governing body for this area in the centre of London, known as the Square Mile. And we've just got a new advertising campaign to encourage everyone back, but you don't need encouraging, and we're calling it the Square Smile, which is, and the Square Mile is only about twice the size of Tallinn Old Town. For those of you who like their history, I'm the first Lord Mayor since 1861 to serve 2 years because of COVID. That last Lord Mayor was somebody called William Cubitt, who was a big building company firm, a family firm. Tom Cubitt, his brother, built Belgravia. He rather immodestly built Cubitt Town down in the Isle of Dogs, which still exists today, and he also built Covent Garden. And I'm told he got a second term because his largesse to the city was so great. They said, give him another go, we can have more banquets and more happy dining. But anyway, I jokingly say I'm probably the cheapest Lord Mayor there's ever been. But anyway, I'm also the ambassador for UK financial and professional services who are based here across the whole of the UK, which employs 2.3 million people, is 8% of the GDP of this country, 11% of the tax take, and 2/3 of those jobs, interestingly, are outside of London. A key component of this is fintech, an industry I've supported for a long time. As was said, I was a former board member of Innovate Finance, and I will pass those kind words on to Charlotte Crosswell and Lawrence Wintermeyer, who started, but then Charlotte, because I agree with you. I think it's been a very good thing that they've achieved. Fintech is, of course, a booming industry in the UK, in Estonia as well, and all over the world. Emerging technologies offer companies countless opportunities for growth and innovation. Now, the fintech boom has a flip side. FinCrime is on the rise, which will require new solutions. But of course, our fintech sectors can provide the expertise and the technology to find these new solutions. This is particularly important for us due to our responsibility for the City of London Police, the UK's national lead force for tackling economic crime. And also because we recognise that security, integrity and trust are crucial for the conduct of business. Fortunately, we are supported by the UK's strong cyber security sector, the biggest in Europe, worth over £8.9 billion, a sector which has meant we are the third largest exporter of security services. World-leading cyber firms are located throughout the UK, taking advantage of exceptional pipelines for talent and investment. And it is vital that we ensure those companies still have access to everything they need to flourish. The UK's accelerators for high-growth cyber security companies, both the National Cyber Security Centre Cyber Accelerator and the London Office for Rapid Cyber Security Advancement, have been doing a superb job in supporting the sector. And the City Corporation is working to provide access to cutting-edge cybersecurity expertise that will keep firms resilient and competitive as the cyber landscape evolves. Through our work with the FCA, the Financial Conduct Authority, we developed a digital sandbox, a place where innovative firms could try out their digital solutions aimed at preventing fraud and scams, where they could develop, test, and scale up their products. I hope today's event can help in strengthening cooperation between Estonian and British financial institutions in both fighting financial crime and continuing to develop fintech. Estonia is a great centre for fintech, something which my predecessor as Lord Mayor saw firsthand during his visit in 2019. I'm pleased to see Estonian firms such as Zego, Monese, and LHV making their mark here in the UK. And I very much welcome Wise's listing on the London Stock Exchange, having met with Wise, then as it was TransferWise, myself a number of times. The City Corporation is a strong supporter of the Hill Review into UK listings, which aims to make it easier for more firms to list here in the future. We also worked on the Khalifa Review of UK FinTech and welcome the review's recommendations, including its call to maintain access to the global talent that is so essential to fintech success in the UK. I hope more and more Estonian firms will continue to establish themselves in the UK so that we can draw on each other's strengths, innovations, and expertise. Thank you.
you forget? Yes. Thank you, Lord Mayor.
Thank you.
Thank you, Lord Mayor. It is now my pleasure to introduce Minister Andres Sweet. Andres is the Minister of Entrepreneurship and Information Technology in Estonia. He is in the cabinet of Prime Minister Kaja Kallas. He has a degree in economics and finance and is a graduate of the Advanced Management Program in INSEAD. Plus, he has a degree from a little-known and obscure school called Harvard Law. Would everyone please welcome Andres?
Yes, thank you very much for a kind, or maybe even too kind introduction. So, dear Lord Mayor, very pleased to be here after a pretty long while. I think I was in London before COVID time, so it's really good to be back, and also good to be back in this historic hall. The topic of today is how we can use fintech to fight the crime, and I think this is important as a crime is becoming increasingly sophisticated, is using increasingly more data, is using increasingly more cross-border activity, and that's why I very much agree with also what Lord Mayor said. In order to tackle the crime, we really need good international cooperation. There is another thing what makes me really pleased, and that's the fact that we actually are here witnessing quite a number of Estonian companies establishing a physical presence in UK. One of the hosts of today's event, LHV Bank, is an example. Wise, who did the direct listing here, is another one. And we are really proud of the unicorns we have of Estonian origin. We oftentimes say that, okay, we have most unicorns per capita terms, which is, I think, great, but I think the ambition doesn't really stop there. I know that the French President Emmanuel Macron said that we need to have 25 unicorns by 2025. And I listened a presentation we had in Tallinn a week ago, roughly. And I said, okay, I accept the challenge. 25 unicorns in Tallinn or in Estonia by 2025. So everybody is welcome to join this exercise and give his or her contribution. There is another great example who is also presenting today, and that's Fintech or RegTech company, I think rather, called Salv, who is precisely doing the work of using data and information to better tackle the flows and activities which really shouldn't belong to the system. And that's why I'm very happy that Salv is today present and is going to talk more about how we do it, and that's in very close collaboration with the authorities in Estonia. Now, those of you who have been in the industry a little longer, with experience going back to previous century, late previous century, that was a time when banks did expand cross-border. If you look to 1990s, that was really the drive. You had a lot of consolidation, cross-border business expansion, which then came to complete standstill with a global financial crisis. And that's why I jump back for a second to LHV, who actually is moving to opposite direction. I don't know how many instances there has been in the recent past where a bank from another country is actually applying for a license to be operating in UK. So that, I think, is important. I think it's important as a sign, because I firmly believe if we want to advance, if we want to make the industry contributing to the economic development, to growth, then we need to go back to 1990s model. We need far more cross-border movements, far more cross-border interaction. And UK, of course, and City of London in particular, is an important counterparty for any business in the fintech field, including from Estonia. Of course, it's a two-way street, so any business from UK is also welcome to Estonia to see what can be explored, invented, so that we can jointly build the better and more safe and clean financial system. So I wish everybody a very productive exchange of views. I'm confident there will be something tangible out of it, and there will be more products launched and aired soon from Estonian fintech companies. There are plenty of them here accompanying me during this visit, and I very much look forward also on bilateral meetings. So thank you very much, and enjoy the debate what is going to follow.
At this point, the Lord Mayor and the Minister are going to be leaving us to tend to their business. But it is my distinct pleasure to introduce, again, one of the best experts on this topic in London, and that is Chris Farrow, who is the Principal Payment Scheme Fraud Prevention Lead at UK Finance. Chris is was a 9-year veteran of the Metropolitan Police, and she has coordinated the setup of the Banking Protocol, which is a collaborative nationwide initiative taken up by financial institutions in the UK, the police, and trading standards. Chris, over to you.
Afternoon, everybody. That was no pressure there at all. Okay, so I'll get rid of the first slide, which actually says who I am and where I'm from. Okay, so UK Finance, once every 6 months, publishes figures around the current picture of fraud across the UK. As you can see from those figures, there's nothing pretty about them. This year they are particularly bad, and I'll be completely honest that when we actually looked at those figures and tried to work out how we was going to put a positive spin on them, all of our members went, there was no good thing you can say about it. So what we are seeing is that despite huge collaboration across our membership, working with partners, working with us, etc., we are still seeing a significant increase in fraud across the board. The current trend, if it continues in this year alone, we are going to see authorised push payments being higher than unauthorised fraud for the first time ever. You could say that that's a product of our own sort of excellent work over the years, because actually in the unauthorised space, we've done an awful lot of work to try and identify payments when they're being made not by our customer, but by a fraudster. Obviously, with authorised push payments, that's not what we're trying to identify. We can see that it's our customer making that payment. Okay, so in the first half of this year, compared to the first half of last year, we saw a 71% increase in authorised push payments, i.e. scams. Okay, so, just turn over the page would help. So, in fairness, if I was a criminal, and having worked in law enforcement for so long, if I was going to do anything, I'd be a scammer, because there's not a lot of skill needed there. If you're going to commit a crime, all you need to do is harvest some information about your customer, which is easily done through social media, by making phone calls to people, sending text messages, etc. There's lots and lots of loops there how you can just harvest that information, and then all you need to do is simply have a really good telephone voice, phone up, and actually convince somebody to transfer their own money to you. I had a really interesting conversation with a member last week who had actually kept a criminal on the phone for 35 minutes. I've actually got the recording on my phone, which was hilarious to listen to. And effectively, I don't even know how he managed to get this person on the phone. I think they phoned up to try and actually social engineer him. He's the head of fraud at one of our major banks, so obviously he's going to keep them there. So 35 minutes he had them talking, and I'll be honest, I've listened to the call. I can see how people could fall for it, you think things like holding accounts, how do people fall for that? But I do think that actually listening to it, they had loads of information about regulations, they knew lots about the PSR, about the FCA, they knew lots about the way that we do business. And they knew an awful lot about our person who's actually the head of fraud in one of our banks. So to actually listen to that call and hear it firsthand, I can see how easily it's done. So I think that's one of the things as we go forward. As an industry, I think sometimes we do say, how do people fall for this? But actually listening to the call, it does bring it home. And I think if we can get that published at any point, it would be really interesting for all of you to listen to as well. And on that point, I don't know if anybody's seen it, but if you are interested in learning more about this stuff and about how people actually get your information, I'd highly recommend, if you haven't looked at it before, CIFAS, one of our sort of member trades, member firms, etc., they've actually got a really good film, and it's about how you harvest information. And it's actually, it's done in a coffee shop, and it's really basic stuff. It's your name on the side of your cup. It's about you having a conversation there and picking up pieces of information. And it just brings it home how easily it is to get that information from you. And on that point, the anonymity, can never get that word out, of things like social media, telcos, etc., they are used by criminals every day, and that's something that we as UK Finance and our members, we're looking at various ways that we can work with those organisations to try and sort of close those loopholes and actually try to reduce the numbers in this scam type. And from a victim's perspective, and one of the reasons that I'm so passionate about authorised push payments, and I'm looking at Naomi because I rant at her all the time about it, Naomi's over there, who works with me, it's really personal. Unauthorised fraud, you pretty much know that you're going to be reimbursed if you're a victim of unauthorised fraud. But when it comes to scams, these people can be engaging with these people they could be for months. Some people, we've got cases where they've gone on for years. They think they're their friends, they think they're in a relationship with them. And once they actually find out that actually they've been a victim of that scam type, we've seen quite a few cases where people have committed suicide. So from our perspective, this is a massive problem, and I'm really pleased to be working in partnership with lots of people in this room. So from our side, it's not just about the sending firm either. So I think there's been lots of work and lots of discussion over the years around, as an industry, what can we do to try and interact with our customer? How can we provide effective warnings? I'm sure you'll all hear the words effective warnings quite a lot over the years. But it's not just about that sending firm. There's an awful lot of work that we also need to do around the actual mule side of it. It's the actual laundering of the funds. I think if we're going to approach things like scams, you have to look at it the full journey. And it is that cash out point as well. And I'll be honest, we have seen an awful lot of migration away from traditional banks to banks like you in the room, because I think that criminals are looking for those loopholes and they're finding ways to actually sort of get around newer to market type onboarding. So things like your selfies, etc. They're getting around those quite easily. And we are seeing the migration of that mule problem going from the high street banks to the more online sort of fintech type environment. And again, really keen to work with your industry, etc., to work out how we can actually try and fill that gap. And the other point to really bring home is we are seeing a quite high migration of cash out through crypto. And we've actually started having quite a few intense conversations with crypto firms, trade associations, etc., to say, how can we work with you? How can we try and fill that gap and not see that all those funds going to you quite so readily? It's been a significant rise. So with the numbers that we're seeing are huge. So, as I've said, this isn't just about the industry trying to fight this problem. As you'll see from this slide, this is only for smishing. Obviously, we've got slides that look at all the different types of laundering, all the different types of actually trying to actually obtain people's information. But you'll see from this slide that it's quite an interesting and quite a good view of all of the different areas that need to work with us on this problem. So from the telephone infrastructure, internet service provider, hosting companies, fraudulent websites, all the way through to our tiny little bit in the middle, which is actually the bank services. So as you can see from this, it's not just about us trying to solve this. We do need to work with partners, and that's what makes authorised push payments so much harder, because it's not just about us as an industry trying to fix it. We have to look at the things outside the box. And I think a really stark piece of information that we've got is that actually we demonstrated through work that we did with some of our members towards the start of this year that around 70% of all scams originate from an actual online platform. So it could be people clicking on links, it could be adverts for purchases that don't actually exist, investments that aren't actually there, all of those different things. And also things like the phone calls and the text message. We've seen that around the other 30% of all of those scams start with that as the origination point. So from our point, the wider ecosystem does need to be accountable. And I'll be completely honest, actually, we've taken quite a large step forward in the last 6 months. So in the last 6 months, we've seen big tech companies come into the table and acknowledging that actually, yes, they do need to work with us to actually try and resolve this and try and fix this problem. And we're actually seeing there's a new cross-industry online fraud steering group, which has got major players at very senior levels from all of those organisations sitting around the table with us, with the Home Office, coming together to say, how can we work together to try and resolve this? The main things that we're looking at the moment are things like that online mule recruitment, the scam adverts, the cloned and fraudulent websites. And I think that for us, this is a significant step forward, because I think for the last 2 years, we've been quite regularly saying, it's not all our problem, you need to work with us. So for them to put their hand up, come to the table, and actually say, okay, we're willing to work with you, that does actually show some recognition from them that they do need to be involved. So it's not just about the industry, we also need to work with the public. And the public, for the scams, they are the weakest link. That sounds awful to say that, but they're the ones that are engaging, they're the ones that are moving the funds. So there is an element there where we do need to think about the actual education of the public. And we've been running a Take 5 campaign for, God, I think it's 2016 when it first launched, and that's having some impact. But again, I think that when it comes to the public, we all need to be involved in that, and we need to look for alternative ways to try and actually engage with them, and actually to try and change the dial and make them realise that actually you can't trust everybody that you speak to. And the big major tech companies have now actually donated $1 million, I always get it wrong, in advertising to help us to raise that awareness. And I think, from my perspective as an industry, we are looking at lots and lots of different ways of working. I know Nick's going to touch on this when he gets to his paneling, because he's been quizzing me all morning about what I'm going to say. But we are working widely with our members. I haven't got slides to show this bit, but some of the things that we're looking at the moment are, what else can we do? Because, as you'll all know, the Faster Payments Network, which is where we're seeing the bulk of these scams moving through, for the industry, it's like sending a payment blind. All you do when you send that payment, you can see a sort code and account number, and you can see the amount that you actually want to move. But we're just sending it blind, and when you speak to the public, I think that they think that we can see more. I think that they assume that we know something about that destination account, and we don't. All it is a sort code and account number to us as well. So one of the things that UK Finance are doing at the moment, and we are working with our members, with the PSR, with the Home Office, etc., is we're looking to say, what else can we do in terms of data share within that payment journey? So what information can we share that's actually acceptable by the ICO? So things that we're looking at and which we're testing with our members at the moment is the inclusion of things like date of birth of the account holder, how long the account's been open for, payment reason, simple things like, has that account been dormant for some time? And if it has, potentially could be a money mule, and we probably need to ask some more questions. So that is one of the things we are testing, and I think personally that could be a big step forward, and then we could see that making a big difference to the actual scam environment. And for us, that data share has to be two-way. So we have to be able to, as a sending firm, have more information about the receiving firm, or receiving account, to be able to make an informed decision. But we also need to be able to make an informed decision as the receiving account to actually say, why is an 80-year-old sending money to a 16-year-old's account and thinks it's an investment? We probably need to check that. But for us to do that, we actually need to look at changing some regulations. So within the current PSRs, we're actually told that we need to send payments within quite a short timescale. So you've got 1 and a bit days to potentially investigate that account. And then as the receiving firm, once you receive those funds in there, it has to be immediately put into that recipient bank account. That doesn't give us as an industry an awful lot of time to engage with the customer, to potentially look at that mule account and actually say, do we need to do something with this? So UK Finance are working with the Home Office, the PSR, the FCA, and everybody else you can think of to put in a room, to say, can we change that regulation to give us a bit more flexibility, to give us a bit more comfort to actually intervene? You all see stuff in the press every day saying, this bank should have stopped this payment, this bank should have done more. But actually, there's never any sort of caveats in there that actually says that, no, we've got really strict guidelines. We haven't got a lot of flexibility. And as a bank, we're told we have to make somebody's payment. So even if we intervene and say, are you sure you want to make this payment? If that customer says yes, legally we have to make the payment. It doesn't give us a lot of room and a lot of wiggle room, as I'd like to say. So even though we've introduced quite a lot of collaborative work, so things like the banking protocol, which is my baby, very proud of that one, which is a national campaign, we're just about to have prevented £200 million in scams since that's been live. I think we're just coming up to 1,000 arrests as well. So it's been really successful, but banks take a risk when they do that because they're stopping somebody in a branch and saying, no, we're not going to let you make your payment. We think it's suspicious. And by the way, we're going to phone a police officer to come and speak to you as well. Could end up in lots of complaints. Thankfully, it hasn't, because it would be on my neck and I'd probably get in trouble. But people are taking a risk to do that. And it shouldn't have to be a risk. It should be that we've got that comfort in that regulatory environment to make that change. And things like, say, data sharing. So data sharing in the payment journey is one thing, but also as an industry, we need to share more data. We need to be able to share that data up front to help us to establish trends so we can actually start doing things like making the warnings in the payment journey more impactful. At the moment, we haven't got that level of data sitting in the background to help us to make those informed decisions and to actually make those warnings very impactful. At the moment, I don't know if any of you set up new payments while you've been, you've got English bank accounts. You get checked, you get asked funny questions, but it's still you having to determine the answer. So it'll ask you why you're making that payment, but you're having to click that and you're having to say what it is. Well, we should be able to have some kind of analysis in the background that helps us to determine that rather than asking you. Because if we're asking you, you've probably got a criminal sitting in the background saying to you, just tell them you're making it for that reason. And then they can socially engineer you around it. So I sound like a bit of a rant, but for me, it is all down to data sharing and more that we can do together. So, and I think the crux of what I'm trying to say is that the fraud problem is not just on us anymore. We have to work together with various partners. We have to engage, and we need to be open and honest, and we need to basically allow ourselves the comfort to potentially make mistakes. And we need to have things like the regulators and the government behind us, basically supporting us the whole way. And I did that as quickly as I could, because I got told 10 minutes maximum. So I think that's it from me. Okay.
Thank you so much, Chris. You've really set the table for our panel discussion. I'd like to invite our panelists to come up and take their seats. We'll begin the discussion. But Chris, was that was 750 million pounds that were stolen? You had it in your first slide there? That's only half a year. That is just a remarkable figure. It's really staggering. As you've noticed, of course, the major theme this afternoon is collaboration and how collaboration is critical to combating financial crime. And just to kind of pay respect to the villains in this story, I think we should observe how crime networks, scammers, fraudsters, the lot, how they collaborate. They're as agile as you get. They're nimble, they talk to each other, they sell hacks to each other, they share best practices, they do all of the things that we associate with savvy and sound business. But they're thieves. And I think it's really encouraging to see all of these institutions on the right side of this coming together and matching what the bad guys are doing when it comes to collaboration. And to that end, I just think it's so newsworthy what we've seen develop in Estonia with the Aml Bridge. The Aml Bridge is it's really a RegTech solution, isn't it? It's a data sharing solution that Tavi Tamkivi, the CEO and founder of Salve, he's going to tell you all about it in more detail in this discussion, but just to set the table, it has established in short order, about 8 months, right? It has established a collaborative process for legal analysis, data security, IT clearance, and of course this instills a lot of confidence in users, both institutions and customers and regulators. There are now 250 investigative collaborations underway under the auspices of the AML Bridge. We have a couple of good examples. There's a bank that reported a single case where 45,000, that's euro, was prevented from reaching the scammers. They must be very upset. And then we have another bank under the auspices of AML Bridge that is saving between 50 to 100,000 euros per week in fraud. And these are just a few dozen cases. And this program it dovetails with similar programs in other EU countries and in the UK with the work that Chris is doing. But this is the front line. This is the cutting edge. And so I am so excited to have this panel here. We're going to unpack this for you this afternoon. And may I begin with Andres Kitter, the head of LHV UK. He's 2 seats to my left here. And Andres he oversaw LHV's expansion to London. They've applied for a banking license, or in the process of getting that. Before LHV, he was a long-time payments manager at Skype. We've heard of that. Yes, that's right. We have to his left, Andres' left, we have Professor Michael Mainelli, who is the co-founder of ZYen, which is a leading commercial think tank and venture firm in the City of London. It promotes societal progression through better finance and technology. He was also the sheriff of the City of London. Do you still have a badge? Do you get to keep a badge?
Sword.
You get to cut the queue, I think, if you have. He was the sheriff of the City of London from 2020 to 2021, and is an accountant and a securities professional and computer specialist, a management consultant as well, wears many hats. We have to my immediate left, Jeremy Williams, who is the global head of KYC at a little outfit called TransferWise. I'm still calling it TransferWise. I'm having trouble adjusting. Wise. So Jeremy is also a veteran of the Metropolitan Police. He was a financial investigator at the Counterterrorism Command, and he followed that up with stints in compliance and AML positions at HSBC and Danske Bank. That must have been dramatic.
It was a pleasure.
Of course, I've introduced Taavi Tamkivi. He's the CEO and founder of Salve, which is the RegTech pace setter in Estonia. He's been leading fraud, revenue assurance, and consumer analytics teams for many, many years. He built the AML fraud and KYC teams at Wise and Skype. And now he's putting that expertise to use at Salve. And we have Nick von Beschotten, aka NVB, who is the Director of International Illicit Finance at UK Finance, works very closely with Chris. He's been working on regulatory compliance for the last 20 years as a licensing officer, a policy official, and he specializes in anti-bribery and corruption and AML. So let's give a hand to the panel before we commence. Just picking up on that, the idea of collaboration and what Salve is doing, I'd like to begin, if I can, with Taavi. Can you please go into just what the challenge was when you started, or you launched 8 months ago? And how were you able, I mean, financial institutions are trained not to share data and information. There are regulations that say they shouldn't. How can you overcome this tradition in creating this kind of new paradigm?
Mm-hmm. Thank you for that. As you heard Ed explaining in the intro, that criminals are working in the networks, and actually smart crime fighters, like we hear, and many of you there as well, we kind of intellectually understand that knowledge is the key. Like if like money is moving from my bank to your bank, and then the next fintech, and then to some strange places, then we understood intellectually that it would be great to track this money and gather this information together and give hints to our colleagues in other institutions. So the crime fighters didn't have any problem with data sharing intellectually, but actually what was the problem was that, as you said, people in general in the banks and other regulated entities know that they shouldn't send out any bits of information about their customers and activities of the customers to the other institutions. And then moreover, like they're used to in these heavily regulated spaces, like we're used to do only the things that the regulators are telling us to do. Like there are laws about anti-money laundering, there are other laws which are explicitly saying, okay, you need to do this, 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 and this, and auditors are checking us constantly. And it's like very strange to start doing something that you can do, but you're not forced to do. Like a data exchange between the institutions exactly which is legally allowed. You can do that, but in your mind it's like something very, very opposite to your daily activities. And actually getting people to change their minds and using legal, technical, operational arguments, getting like regulators to confirm that yes, it's okay, no worries. Getting companies and regulators from other countries, from UK, from Lithuania, to accept that yes, this is a mental challenge, but actually we can overcome this. And there is no legal barrier, there is no technical barrier, and this has taken a lot of time. Once people understood that actually, yes, we can do this data exchange, then everything else was like pretty simple. And that's what we're now educating the rest of the world as well, that okay, guys, you can do that. The crime fighting is always more important than protecting the interest of the criminals in their privacy laws. And like finally people get it, but it takes time definitely to educate. Yeah. That's also why I'm super happy to have this discussion here.
Kind of examining the problem from the other angle, I mean, getting behind the numbers that Chris shared with us. Jeremy, just can you help us understand the state of play out there? I mean, during the pandemic, is it safe to say that there was a huge acceleration in fraud, in payments fraud?
Yeah, as Chris showed in that wonderful presentation, the dramatic increase in push payment fraud was operating in parallel with a complete change in customer behaviour, both in terms of consumer and businesses. Something I saw when I was at Danske. All of a sudden, the usual behaviour, the usual activities that banks have been trained to look for, that we ask our customers about, that we monitor so we can see spikes, all of a sudden it was all thrown away. And everyone started behaving completely differently. And people became used to an entirely different operating environment. And I don't think we can overstate how important that was. People went from a position where on one day they are living their normal lives as normal, so the next day, when they're in this country being told to stay at home. And the psychic environment that created in terms of the response to instructions, orders, I think encouraged an environment whereby push payment fraud, like the sort of text message you saw earlier there, that sense of urgency, that sense of vague unease, I think it was preyed upon, and I think it was exploited to a merciless extent.
Yeah, I mean, how many people in the room got push notifications or are still getting them during the pandemic? I mean, I got HMRC ones, my bank, constantly.
And because that behaviour, because the banks are monitoring for changes of behaviour and changes in your life cycle and what they would expect Jeremy Williams, a 40-year-old man, to be doing, based on what I told them, all of a sudden it was all thrown out the window. Because all of a sudden I was ordering a lot of useless stuff from Amazon. Just lots of stuff, never been used. But that behavioural cycle they've come to expect from me, like, you know, he pays for his mortgage, he's got 2 kids, that general ebb and flow of lifestyle, which traditional banks, the advantage is they provide, they've got that perspective on. That was all thrown out of the water. Right. And then everyone was operating in a Wild West type environment where there was not much known about things. There was lots of concern around misuse of government subsidies, certainly where I was at the time in the Nordics, whereby warnings were put out about exploitation of sort of COVID relief, and these coupled with whispers that people were using the purchase of PPE equipment to produce. All of a sudden, we had a spike in behaviour that was all investigatable, all reportable, and it flooded. It was a flood. On the other hand, you had people who, the general environment again, caused an increase in distrust in the traditional financial sector. So we would have good, solid customers, 40, 50 years with the bank, all of a sudden coming to take emptying their accounts because they didn't trust that the financial sector would be there this time next year. So again, that change in behaviour, the general feeling of unease that it was created created that perfect hunting environment for criminals who, as Chris said,
Hunting environment, right.
exploit.
Yeah.
Look for people and exploit them. With that sort of stuff, you can just send out a message to all of you, cost me nothing, and whoever bites goes for it. And what tech companies in general are very, very good at is looking for data, looking for usage data, and identifying where people are likely to be vulnerable. And in partnership with agencies like Chris's, we can use that expertise and use that to anti-fraud messaging to where it needs to be. And I think that's what I would hope to see in general in the sector over the next few years.
Okay. I mean, we'll drill down into the tech in a bit, but I just want to stay with the behavioral part of this. Michael, could you just address these behavioral changes that we've seen among consumers, among financial consumers, especially in the context of the pandemic and the fresh challenges that's posing to financial institutions today?
Well, thank you, Eddie. I'll have a quick counter at it. I mean, picking up really from Jeremy's point, we had 6 million adults go online banking for the first time last March and April. That's astonishing. I think you should fire the marketing departments of all the banks. If after 20 years of online banking, there were that many people who hadn't seen a bank account online, that's insane. But that I think gives you an idea of the scale of change. And one would argue that these people are relatively uneducated in the situation. But I think that brings forth probably two things about behavior. I mean, one of the things that we seem to miss is simplicity. When we have to rattle off, as Chris did very, very, very nicely, all those names of the entities that are there, when we're trying to look at the consumer and say, you should be aware of this scam and this scam and this scam and that scam and this scam and that scam, it's far too complicated out there. And we're not focusing as much as we need to on simplicity. You know, I admire, for example, and I happen to have an Estonian EID, but one could equally admire Singapore and other jurisdictions where they've gone to make that element of it, you know, very easy to handle. In fact, I put in a trading system 5 years ago in Singapore, and about a third, maybe 35% of the effort we would have normally put into building the system disappeared because we were simply able to access the government application for individual identification and the government application for business identification. So those are two things we just didn't have to do. And they're a large portion of any system that you would build here. So simplicity, I think, is one. And I think the final matter, which I don't mean to widen it too much, Ed, but one of the things that we seem to forget is if Britain is open for business, try opening a bank account. It's nearly impossible. And this sort of behavior is the untalked about behavior. We spend a lot of time on fraud, but it's why bother? Why should I bother to set something up? Why should I bother to change accounts? Why should I bother to encourage competition? And it's the behavior that isn't being seen that is equally dangerous as well.
I mean, Andres, you've spoken about the struggle as a banker, just the struggle of coping with this state of play, with this situation as we see right now. Can you just walk us through what you're doing at your institution to get out in front of this?
Yeah, very good question. I think I have two answers or two pillars on my answer because here in UK, LHV provides banking services to Fintechs. We have more than 180 global Fintech customers using LHV payment infrastructure for the faster payments, for the SEPA Instant. LHV is processing about 8% of total SEPA Instant volume, which is quite massive. You see a lot of things happening there. But similarly important is LHV retail offering and full service offering in Estonia, where we actually see the fraudulent behaviors against our customers. And so we're basically fighting the fraud with two swords at the same time on different angles. And as a bank, you do a lot to inform your customer base about the fraudulent behaviors. The Take 5 initiative by UK Finance is a really good example that you always need to inform your customers because this is where the knowledge of fraud and understanding of fraud actually comes. Yeah, it's complicated because if you have to describe 5 different fraudulent campaigns, which is ongoing at a given stage, customers lose track what's really happening. But you have to do. Then you have, of course, the active fighting, which means that you track the websites which are mocking LHV or any other retail bank, and you actively also monitoring your network traffic, what really happens when fraudsters are attacking. So there are so many different angles. But now, if I'm switching to the banking services business, then this is about sharing the knowledge and sharing the data. And today's event. So the audience is full of our very good customers. They all have similar views on the fraud and similar activities ongoing to prevent the customer base, prevent innocent retail banking customer. And here, I think it's most important thing is sharing the data. If you see that the transaction can be fraud or has suspicious indicators, share the data, ask the information. I can also bring a very positive and good example with our very good partner bank, NatWest. We have constant open dialogue between LHV fraud team and NatWest fraud team, just in order to prevent and solve the cases what were really happening. So again, we have very good relationship with NatWest. Maybe it's not happening in a similar way with other banks, but it's a good example. You can fix the things. Communication is important. And now if we are able to standardize the communication and also make it easier, then we actually save a lot of time, a lot of money for everyone.
Yeah, it must be, as a banker, it must be such a challenge to, on the one hand, secure and protect your customers from crime, but on the other, not set up so many hurdles to either onboarding or handling or processing their business that the customers become frustrated, that they end up getting lost in the phone tree and all of those things. But that's the era we live in. I mean, Nick, open banking, faster payments, PSD2, Fintechs like Wise and Revolut, challenging. I mean, this is a febrile atmosphere, right? And the pressure is on to deliver speed, convenience. How do you balance those innovations with security and protection?
Well, I think there's a number of times today where we've been hearing the same messages coming out.
Yeah.
It's actually about getting across a simple message to everyone. Don't be put under time pressure. Don't be rushed. Critically, don't be isolated. Now, that sounds very ironic after the lockdown, but as Jeremy explained, it was a very, very strange situation. We in the banking sector had to work a lot with the grocery sector because a lot of the online purchases were getting frozen because the queue meant they were being processed in Mumbai at 2 o'clock in the morning, which everyone's fraud systems went, let's have another look at that. So, you know, the usual, unusual, we've got to collaborate a lot more, but the message going out to customers, I think, is getting out more consistently. We've now got new partnerships with the online platforms, with social media. We're still pushing hard for the online safety bill to include similar checks, because these are all our mutual customers. It's the same individuals exposed at different stages in the kill chain, as you saw on that slide. But that's the customer side. The customer is sometimes called the weakest point in the link, but I think we've often seen every sector at one point or another drop the ball on our own behalf. And I think that's why the information sharing is critical. It can be very difficult. I think the great thing about the bridge and our own best practice standards for sharing information around authorized push payment scams is it's just the infrastructure for starting a bigger dialogue. And the infrastructure gets messages out quickly, not as quickly as faster payments, gosh knows, that's painfully fast, but fast enough to build up dialogue and to build up trust between institutions who won't necessarily have the same risk appetite, very frequently won't have the same regulatory obligations, and that's another factor, because that builds in a whole lot of painful things. I don't want to insult any lawyers in the audience, but if you think dealing with the regulator's hard, dealing with the in-house legal, that's even harder.
Just stay with that for a second. Why is that harder?
There's a discussion at the moment around extending criminal liability for failure to prevent economic crime. There's already one large member of ours who's pled guilty to failures to
so these are officers of institutions
exactly
being held
right.
culpable for failing to head off.
Exactly right. And it's important that the regulatory system puts accountability where it's due, and if things are wrong, they need to be put right. But the key point is, what are you trying to prevent? And I think Andre's put it that there should be an expectation that you share information to share the customer. But at the moment, the expectation is you're supposed to balance conflicting legal obligations. The European Banking Authority made a very good point in their recent response to the Commission on their AML response, which we have an interest in despite Brexit. Mm-hmm. And the point they made is it should be business as usual to share information to prevent economic crime.
Right.
And it's interesting when you get into the discussion, what does need to know mean? It's not just a restriction, it's also a duty. I need to know that to prevent our mutual customer. Now, at the moment, the legal obligations make that a slightly dicey proposition. And I think the infrastructure is important because it allows you to do it, but also to reassure people it's being secure, it's necessary, and it's proportionate.
So there's an expectation for data sharing, for sharing evidence of fraud between institutions, but the lawyers might jump in and say, well, we don't know if we can share that information. Am I understanding you right? Is that?
I think most people will be looking for lawyers to keep the corporate safe, but also to enable the corporate to manage their risk effectively. And it's that effectiveness bit I think we need to collaborate more on. I wouldn't say that the fintech sector needs to do what the central banking or the large retail sector does, but we all need to be much better at working collaboratively in a complementary way. Right. Fintechs have data we don't have, sometimes delivery, sometimes geolocation, but the banks have information about the customer's income, about their life cycle, that we can all pull that, we can do it much more effectively together.
Tavi?
Yeah, Nick raised actually two really valid points. Like one point that we need to keep in mind is that like we as a crime fighters, or we need to remember that like people who are protecting companies' customers' data processing officers, their main job and focus is to minimize all the risks around data leakages, around like illegal data sharing of the customers, and like
that's their obligation.
And exactly, and like getting it from data, like from risk minimization up to proper risk management. That's actually a challenge, but we need. That's why we need to work. But the other point that you really well raised is that it's not only about fraud, where like proceeds are stolen from our customers, but actually it's about different types of the crime, like terrorist financing, true money laundering. Actually, I'm really happy, maybe it's not the right word here, but thanks to this fraud stuff which is going on now all around the world, actually AML crime fighting teams are getting more resources and more knowledge and more collaborative work to fight different types of financial crime. So luckily it will help to beat also this true money laundering, which is like, if we talked about like 50,000 or a couple of millions saved, it's great, but actually money laundering is like 100 times bigger and no one sees it. Like no one sees that if the corruptive proceeds that were made a couple of countries ago, and that so far before this fraud discussion started, no one paid the real attention to the money laundering problem, which was huge. But now, thanks to this fraud, we have better tools, we have better acceptance that, come on, let's build this crime fighting systems together.
So those anti-fraud tools can be purposed for AML as well?
Yes, exactly. This data sharing, as we discussed, it doesn't matter if we're sharing
Jeremy?
data about fraud or about money laundering or terrorists, actually.
Okay.
So you can use big data to look at what a fraudster life cycle looks like. You can see what IP logons, time of day. You can extract that information from a set of data points. At the moment, the efforts are hampered because the predominant lifestyle activity that I was talking about earlier happens in the traditional retail bank account. And then the payment space happens with us. And so both sides are blind to each other. So that collaborative approach that we were talking about earlier is saying, let's look at the macro picture of where someone starts to go bad. And then that big data analysis could be applied, which is what we do, to look at, where's the earliest point we can start picking this up? Start bespoke monitoring and bespoke identification of people who are both vulnerable to and a threat of financial crime. But the acknowledgement that these two territories, like the safe, wholesale retail banking and also the payment space, I think it needs to be acknowledgement from both sides that that's territory that belongs to the other person. And then once that's there, we can start that conversation and really start to trust each other and start sharing not even individual details on the personal level, but what behavioural archetypes look like. And that, I think, once we get to that stage, the same level of thought which goes into, for example, assessing me for credit risk, based on what I do in my, assessing me for fraud risk, assessing me for AML risk, that's when we're there. But we can only do that with the two sides of the picture.
And the two sides you're describing are payments and the current account?
Yeah, exactly. As a very, very simple example, yeah, I would call it like my lifestyle account that I pay my mortgage out of, I pay for my kids, plus the payment space which I use because it's much more flexible, it's much more agile, it does what I need to do.
Right, right.
May I add a couple of thoughts here as well? So the slide which Chris showed about the whole ecosystem of the fraud, where it starts, where the mass SMS posts going to the customers, it's not only, it doesn't have only two sides, and we're too much concentrating on two sides because one thing, retail banks usually have a lot of money and funding to build all sorts of complicated anti-money laundering and fraud prevention tools, and the fintechs are regulated and should do the same. But all the steps before, the telcos, all the web hosting sites, they all can do prevention. They all can actually do content analysis, what has been sent out to the customers, why this random company is sending out the mass campaign to tens of thousands of customers using keywords, NatWest.
So you're talking about telecom platforms.
Exactly. So
these are non-financial entities that are involved in the chain.
Slightly different regulations, slightly different responsibilities as well. So you cannot only look the financial sector being responsible.
Are non-financial entities responsible? Do they have any obligation on that score?
They do. I mean, there's a lot of work we do with other sectors, including the telecom sector, including social media. And if it was a consistent regulatory obligation, it'd be much better. Right? It would speed up collaboration. There'll be predetermined, consistent definitions. As it is, we're working against the grain of regulation, but we are doing it. I think the key point, and the online safety pill is probably the best example of that, is that there is a very different expectation out there between the geeky regulated community about what the law requires and what the public expectations and the parliamentary and the media expectation. And again, I'll come back to the same point. These are all our mutual customers, and yet the obligations don't match the risk. If you're bringing risk into the system, you should be mitigating that risk. It can't be one size fits all. It shouldn't be one size fits all, but it does need to be driven a little bit more by that holistic picture.
So Parliament should be leaning on industry to be more responsible. Media should be educating in a much stronger way.
I think so, yeah.
Mike?
We're probably diving too much into UK specifics, but there are some interesting gaps. I mean, one in particular is critical national infrastructure. Financial services doesn't fit into the CNI structure.
The CNI structure?
Yeah. So if we have a financial services incident, this is something that's been pointed out really since the pandemic, as a lot of things have been being kicked a bit. If we have a big issue and a bank or a payments provider actually loses their telecoms or their utilities or whatever and says we need to get this back online, they're actually at the back of the queue because we have a separate financial services CNI, but it means all the supporting stuff isn't part of it. So
that's an infrastructure issue.
So there's some deep problems in the UK in terms of not joining things up.
But let's stay with tools and practices. We've seen how RegTech and data sharing, using big data analysis, especially when you start applying AI and machine learning programs to that type of analysis, that clearly is very useful. What are some other tools and practices that fintechs and traditional financial institutions should be using, should be employing, can help with this problem? I mean, I'll just throw it open. Who wants to jump in?
Yeah, like as I'm quite close to this side of the world as well, like leaving this data sharing aside, and actually like one of the challenges that I see in today's market is that like the evolution of regulations, like the speed of this evolution is increasing, and there are more and more requirements coming in. There was like risk-based approach a couple of years ago. Now data sharing, it used to be transaction monitoring, sanction screening, and many of technologies that are in use today, they are meant for these older requirements, like sanction screening. There are products out there which in theory should help to limit activity by the sanctioned people, and same with transaction monitoring. But the thing is that those technologies and approaches and procedures which are in use today, they're coming from 10 years ago, 20 years ago. But criminals, either it's fraud, terrorist financing, AML, they are using the most modern technologies. And again, that takes us back to the fintech revolution that we're seeing around us. And if the question is like instant payments versus AML monitoring rules, which change takes 2 months and 60,000 euros for a bank to come up with a new, the people in the banknet, they know what is the new monitoring rule that they want to launch, but the provider says that it takes 2 months and 60,000 euros, then you can do that. And criminals are changing automatically their behaviors every day, like every hour, every minute. Like there is a huge gap, and that's where another layer of technologies has to be implemented. Of course, the difficult part is that who pays for it. And if the bank puts all their effort into the crime-fighting tool development, then who should drive actually the financial innovation in the non-criminal world? There is very hard to balance. I think Andres maybe can comment also how to balance between the crime-fighting innovation inside the bank versus your own product development.
Yeah, it really depends how open you are to innovation. So I guess a lot of banks aren't very investing into the product offering either. So it's a fine line. But the one thing which I would add is also the responsibility and learning from their own sector. Actually, if we look at the fraud, we have now the first time when the APB fraud is greater than a card fraud in UK. Card payments have been around for e-com internet activities and more or less instant payment situations for 20 years. A lot of fraud fighting tools are actually already implemented in card payment space. And also liability has been slightly better organized in the card payments industry. So I think the payment schemes are also a bit too behind learning from the card schemes and then make sure that the similar efficient things are implemented.
Mm-hmm. Mm-hmm. I think just coming on what Anders was saying there about the investment within banks into new tooling and this sort of thing. Traditionally, one of the questions that a regulator would ask me is how many people do you have in your AML department? How many humans have you got?
Yeah.
As if that, I've got 1,000. You're fine. Coming into that incentivization and the cost weighting, eventually there aren't going to be enough humans to throw at this problem. It will cost too much. So it is in the traditional sector, the fintech sector's best interests to start making this more intelligent and targeted and efficient, which will ultimately flip that cost the other way.
So more software. I mean, using just best of breed. Yeah.
Can I disagree? I mean, I don't think it's a technology problem. We've been seeking bullets for ages. All the stuff that we talk about is AI and machine learning. You can go back to the Falcon products of the 70s, which did the same thing in card processing. So we've reached the limits. Where I do think Jeremy's got a really deeper point, and I think you touched on it too, Nick, is the way in which the fines work. You can't do cost-benefit analysis. If you get fined, it's a political problem. You let Osama bin Laden through, you'll get fined billions. You let 10,000 people through and you'll get your wrist slapped. There's no proportionality. So you can't say, look, every time we have a breach, we lose £1,000. If I did that and I said, well, I've got 50 million customers and I've got X number of breaches, I could calculate how much I want to put in. I can't. And I get no feedback on my SARs. And you're absolutely right, Jeremy, what I get is how much effort are you putting into it? Input, not output. So even if I had a silver bullet that I'd worked on, that won't get me out of the thing.
So you're saying that the penalty side of this equation is too arbitrary?
Yeah, completely. So if I want to do cost, and I have a genuine case of a client who looked at 2 major AML systems, tested it against their customers, and agreed that they were useless. They showed it to the regulator, and the regulator said, and I won't name it, but why aren't you using X system? Well, why? It doesn't work. We tested it. Yeah, but everybody else uses it. Yeah, but we've been working really hard on research. We think we have a better system. Well, why don't you implement X system and then see if your research works? You see, and at which point they implemented X system, made the regulator happy, and they quit.
But X system may not have been effective.
No, it didn't. It was not effective.
It was
they
not
proved
effective
it before they installed it.
Well, that's
and that's what happens. So if we had something like genuine fixed fines, I, as a business person, could say, this is worth me investing 60 million, to cut that or whatever the sum involved is.
Don't we have that when it comes to tax evasion and tax avoidance? And
I think we do have something like that for sanctions, and it's a terrifying escalation.
For sanctions?
For sanctions.
It goes through the roof,
And I think that the latest FCA figures show that people are starting now to get into the idea of automated sanctions screening, at least in the retail sector. But somehow the compliance headcount is still going up as well. So that's not a silver bullet. I think the thing for me is if we're looking at what we're trying to spend the money for, I don't think it's to reduce fines. I think it's to actually reduce harm. And I think it's to uphold the integrity of the financial system. And the knock-on benefits for that, maybe people are more willing to engage in online trade. We may have more competitive position for UK. But the main thing, at least for today's discussion, is to reduce that harm. And so a harm-led approach, it gets very complicated. And the more you design one problem at a time, the more difficult it is to actually make it affordable. So if you can build a system that's flexible, responds to risk, then I think that's why everyone's interested in sharing data in real time and sharing information, because then you can follow where the criminals are going, because they're always one step ahead of you.
But you need to have a regulatory partner who you can communicate that to. Because I had a transaction monitoring system that was very good, very targeted. It would target different segments, different behaviours, and the analyst would come through with 50 slide deck. And I'd say to them, turn this into 10 sentences. Because when I sit down with a regulator, I need to be able to explain this. And if they don't have an equivalent understanding their side, I may as well say, I'll get 50,000 more people.
we're going to open it up to questions from you all very shortly here. But I wanted just to pick up on this, I just wanted to ask, if I may, about the balance between using great software, whether it's on the data side, monitoring, screening, et cetera, and then the interpretation by human beings, that interaction that takes place, because that can get out of balance pretty fast, right, Michael?
It gets out of balance extremely fast.
Yeah.
My payments supplier is rising up my risk register rapidly.
Yeah.
I can get locked out. And I have a real example of a client of mine who got frozen out of all their payments for 14 weeks. 14 weeks. And nobody would talk to them, yeah. And nobody replied to them. So an automatic trigger without the service behind it is a disaster. So I've now got 2 payment suppliers, which of course encourages more leaks in the system.
So you're saying false alarms can shut things down pretty fast?
The big data interpretation of my activity isn't correct, because I'm acting one way on one and one way on the other. So the efficacy of the tools decreases. So this idea that it's all about stopping criminals, it's about a risk-based approach, which I definitely want to stop criminals, but I've also got to concede that there's going to be some risk in it, because the safest thing to do is what they did to my client for 14 weeks, lock their money up.
Right, right.
Can I also bring a couple of interesting thoughts around automation and human? We talked about sanctions. We mostly talked about fraud, but if we think of sanctions, then sanctions are usually validating the name of the payee or receiver and date of birth, if there is a name match. Well, simplified, but roughly these. I still strongly believe that many banks today using aliases for the payment processing, not actual names, which means that you still get partial matches with the sanctioned.
You mean they haven't properly identified their customers?
No, they have, but they're using an alias name for the regular payments and cards, for example.
Right.
The other thing is that, well, card payment is also a payment. But if somebody has ever opened up a card processing authorization message, you won't see the person's name in it, or at least nobody's checking it. So why we have two different payment options, similarly transferring funds from one person to the other or to the company, and one where you should do sanction screening and the other you literally can't do any sanction screening. So isn't it awkward?
Right. Let's open it up to questions from the floor, and I think we'll also have some questions from our web audience. Do we have a question? Don't be shy. We have one up, this gentleman in the front here, and then this lady in the second row over here. Do we have a microphone for this gentleman here? Thanks, Brett.
Hi, everyone. Without diving too much into the legal weeds of some of what you were talking about, I think one of the things that really interested me was the inherent conflict in wanting to share data with other kind of players in the payments and banking ecosystem and the restrictions on sharing that data. And I'm thinking in particular about the law against tipping off.
Tipping off.
Which is, if you share information with somebody that would prejudice an investigation into money laundering, you are criminally liable for that. So that obviously could have quite a wide scope, and the problem is you don't really know who might be involved in a particular, series of illicit transactions or whatever. So, I don't think it's as simple as going, oh, well, I'll just speak to every PSP in the payment chain, or speak to the bank, because one of them might be a bad actor that is helping this person, right? So my question to the panel is, do you think there needs to be a change in the law into tipping off?
Yeah, I can answer that, because that's one of the questions, or one of the very first questions that I always got when I started to speak with the banks and fintechs, that what about risk of tipping off? The real life is that after they have joined the network, like after they have learned to know the other members of in the network, they have lunches together, they have like knowledge sharing, not only on the technical level, but also human level. This question about tipping off hasn't been raised never since then. So it's like my conclusion is that yes, the risk is there, but if you're putting together smart people who are actually conscious of that risk, and you're giving them right tools which are helping to minimize the risk of the tipping off, then of course the risk is there, but it's lower than the benefit that you're getting. And again, like there are, just imagine like in the social world, like we have Facebook groups, like different friends and like families and like complete strangers. The same happens in this information exchange as well. Like bank in UK shouldn't exchange all the information with like some random fintech startup from in the middle of nowhere, so we don't trust these people. You share only very little information that even tipping off wouldn't harm, but you would share the high quality information with your colleagues around you. So that's risk is there, but it's pretty easily controllable, as you see.
I would like to add that we still need to assume, and should assume that both parties are regulated parties. They are under supervision. That there are SMF function which has been validated by the FCA. They are fulfilling the same obligation and duties like yourself. So if we don't have a fundamental trust to each other in payment or financial industry, then we have a much bigger problem.
And I would say that the tipping off legislation in its current form has done more to hinder the fight against money laundering than almost anything else. Because in my entire, it's always, I don't want to ask the question because of tipping off. That's always, it's not how can I ask the question, it's I won't ask the question because I'm scared of tipping off. So does it become a disincentive?
A
massive disincentive.
Yeah.
I think it has to be navigated around. I think the tipping off is not to let anyone know there's an investigation or that you've reported to the authorities. I think you can still say to people, I'm having a look at this.
Yeah.
There's a common client, what are you seeing? And there's bells and whistles around privacy enhancing technology and all that kind of double matching, but I think fundamentally it has to be navigated around, and it's a factor to the cost and the complexity.
Okay. Another question, I think, in the second row there, please.
So I totally subscribe to the panelists' views that better data sharing will lead to us understanding customer behaviours better. But from a practical point of view, where do we house all this data? do we, oh, I can see Jeremy's loaded up for this. But what happens with all this data? Do we rely on institutions to, even from a formatting point of view, have everything in order so that they're in a position to share this data? Or do we have some sort of centralized server where everyone's data is housed? And if that's the case, does that mean it's more open to hacks and these illicit actors then being able to get their hands on even more data to then obviously engage in illicit activity?
It's a good question. Is the data safe?
The reason I made that expression was, when I was at Danske, a lot of my time was spent trying to set up this infrastructure in Denmark. And Denmark is a nation which is very friendly to government observation of people's like financial activities in private lives. So it was an easier conversation to have, and even that was always the central question. Where does it all go? So I do think that the safest way to deal with it is to store the data on a macro rather than the micro level. So not in terms of like individual names, individual identifiers, but more sort of behavioural data points. I think that's the way that it would become a more sellable and manageable proposition. It's just my opinion.
Wait, what is a behavioural data point? I mean,
I say, like, so instead of sharing individuals' names as being this person is a subject of interest, here we say we have noticed a high concentration in people.
So it's like metadata.
Exactly.
Right.
I mean, I think the new payments architecture is looking at that issue, right? The discussion of, are we going to hold it on the system? Is the system going to hold metadata? And maybe is it going to hold emergent qualities like patterns and so on? I think whatever happens, I can't see regulated institutions not being obliged to hold data about their customers.
Of course.
So given that that's already there, there's a definite cost argument that you might as well kind of develop it out of that. I noticed the UK government took the opportunity of Brexit not to implement the bank account portal from the fifth money laundering directive. There were lots of reasons given. I think one of the reasons was that's not really the way we operate getting those queries here in the UK. So it might come down to different use cases, having information held in different ways, especially if the value justifies the cost to keep it securely. But it sounds like to me there's a lot of cost pressures, and the new payments architecture, no doubt, is going to have to come up to an answer. But I'd be astonished if we held something without thinking first about the cyber risks, because it's not just fraudsters, right? It's sovereign threats as well.
Right.
Some of the early discussions on open banking were really looking at solving deeper data sharing problems. Unfortunately, those got derailed. It wasn't in the interest of the banks. A lot of this is, it's kind of a bit like COVID, really. Do we want to solve it? Do we actually want to go out, fix it, solve it, vaccinate it, and get rid of it? Are we going to leave this as a bit of the common cold, that there are all sorts of coronavirus variants out there, and you, the customer, ought to be aware of them and take some Lemsip? It's what are we trying to achieve here? But there are deeper solutions we could have on data sharing if we genuinely wanted to do it, and I don't think we've yet, sadly, reached that point. But there are discussions going on, which I do appreciate.
Also, just to add from my side, this is another typical question that we keep getting. The point is that you don't need to store everything centrally. Like, banks have their own databases. The question is how you get bits of information from one system to another in a secure way. You encrypt it, you give the privacy keys to both parties. So there is no need for the central storage in many cases.
Also, a practical point of view to data sharing. So there aren't any standardized way how banks are sending, for example, payment recall requests. Some coming in as a Swift message, some coming in as an email. So it's a complete mess, actually. And probably the data leakage risk is completely other places. And that's why I think the centralized, standardized approach would be really good. I think UK is slightly better positioned compared to the EU and SEPA system. You still have very nice pan-European payment system, but some corner cases, especially around FinCrime, fraud, and payment recalls aren't really well developed.
Another question. This gentleman in the fourth row there.
Thank you very much. Great panel, by the way, great panel. Look, there's something that's kind of coming down the line that I'm sure you're all aware of, and I'd be interested in your views as to the extent to which this makes the topic kind of irrelevant. The FCA is doing a consultation following the publication of the FCA strategy last year on consumer duty. I'd just like to remind you as to what that's about, proposing to introduce a new consumer duty that would set higher expectation on the standard of care that firms provide to consumers. So I wonder whether what that's going to do is move the bar so high that in fact being able to process and transact any consumer transactions that are remotely risky is going to be possible at all without a significant fine or punishment from the FCA. So views on the application of consumer duty, please.
Yeah, I would bring one. It's coming again from EU and hopefully it's not applicable soon in UK, but I don't know how many of you know the MiFID II regulation about securities trading, and this is a heavy document which banks were implementing and basically redesigning all the investment products and product offering to the customers. There's a lot of red tape around signing up for the investment services, and you need to express your really deep knowledge about securities trading. And sometimes I think that maybe we need the same thing for the payments as well, because I'm sure that the average consumers losing more money through fraud than they're losing for actual investment, bad investment decisions. And maybe we need to, again, think of some sort of a passport. So I'm knowledgeable payment person. I can have access to the real-time payments and somebody does not. So we can go in that.
We'll all go to payment school, is that?
Yeah, almost, but yeah, it's a joke, but actually we may have some issues in the banking system that some things are over-regulated and some are not, and the regulations does not always reflect the actual risk, what is happening. So.
Yeah, I think from the consultation, at least from the FCA, they talk about sludge behaviours, so asking you to read through a ton of legalese and go through all sorts of little checks and so on until you give them the right answer. I mean, that's the concern.
Is that just for onboarding customers, or is that part of the constant relationship?
I think it was more a way of extracting rents from the consumer that they weren't getting the benefits that the FCA thought they needed to. It was a pejorative term. I don't think it's a technical term.
Yeah.
But they were describing it in a way that makes me think very much in terms of the way we interact with online banking, that increasingly the apps are getting more user-friendly. They're trying to spell out very quickly in just-in-time ways. You sure you want to make this payment? This is to a new account. It's the information that you need at that point. I think if you could bring those two things together, the FCA's concerns about sludge practices and the debate at the moment about what is an effective warning, they seem to me a bit misaligned at the moment, if I'm honest.
That sounds like a lot of friction, doesn't it?
Well, I mean, we want to get the consumers the information they need at the right time. And that's the whole Take 5 message. It's a simple message. Just pause a little.
Right.
Pause a little. Don't get isolated. Call someone you trust. You know, whether it's the number on the back of your credit card or bank or somebody. Don't follow that link. Don't click on that link. Just take time. Sludge factors, in a way, are the other side of the coin. It's where to get the help from your fintech, your lawyer, your bank, you have to go through such a process you don't bother. So I think it's a good point, actually, Tony. I mean, if you could get the two into alignment, maybe you've got better contacts with the FCA on this than I do. But I think there is a link there, but I don't get the sense that the policy's aligned at the moment.
Sludge factors. Okay.
Not my coining, I'm afraid.
Fascinating. Well, listen, I think we'll choose to leave it there. I think ending on sludge factors is a good note. I want to thank our panel very much. Jeremy, Andres, Michael, Tavi, and Nick. Please give them a big round of applause. And please join us for a reception in the lobby. Thank you.
Likewise, we would like to thank you for hosting the whole event. So.
My pleasure. Cheers.